So welcome to our webinar here today. We are going to do commodity basics. It's kind of an intro to commodity or commodities 101 if you want to go back to your college class jargon. What we've designed this particular module for here is we've actually got 101s for a lot of different commodity areas. We have a veg oil 101 and a veg oil 201, and we've got those for wheat and dairy and some other commodities that we've done on these webinars before. And one of the bits of feedback that we've got is that, especially for people who are new to the commodity business, maybe those started at a little bit too high a level, that we needed more of a commodity basics sort of class. So that is what we have endeavored to do here today, is to give you kind of just the basics for how to look at commodities, what commodities are, and things like that to help you get started in this business. So what are we going to go through today? Well, we're going to start with trying to define what is a commodity for you. We talk about commodities, but everybody knows gold and silver and corn and wheat and things like that. But we're going to try to break it up into a few categories for you to help you understand it just a little bit better. And we're going to do that, and I'll give you a list here of some of the items in each of the three categories, but basically think about it like this. A commodity is basically stuff we grow like corn and wheat and soybeans and many other things. It's stuff we dig up like silver and gold and petroleum and lead and things like that. And then there are things that we make out of stuff that we either grew or we dug up. Think soybean meal and soybean oil made out of soybeans. Think unleaded gasoline and diesel fuel that's made out of petroleum. And so those are the three basic categories that we'll kind of talk about and give you some other examples of different commodities that are in those categories. Then we're going to focus more in on the stuff we grow because there simply isn't enough time to go through all of it. And we're going to take you through some of the crop and planting dynamics. When do we plant? What are the crop development stages? In different parts of the world, what's getting planted where, what's getting harvested where. We'll kind of talk through some of those details. We'll talk at a very high level of how to look at a supply-demand balance sheet. I think when you first in this business and you start looking at these supply-demand balance sheets, it's like an accounting grid, if you will. A lot of people look at those and go, well, what do all these numbers mean? It just looks like a page with a lot of numbers. So we're going to help you try to make a little bit of sense out of that and a little bit of sense out of when you look at that, what does that balance mean to you and what effects might that have on pricing? Then also, we're going to attempt, without getting too far off in the detail ditch, to talk a little bit about commodity hedging. You all know or probably know that commodity prices go up quite a bit sometimes. They go down quite a bit sometimes. Pricing can be very volatile. And if you work for a food manufacturing company or a company that's making retail branded pot products that are going in the grocery store or a restaurant chain, it's often difficult to change your selling price. And so that presents a lot of price risk. The ingredients, the commodity ingredients that you're buying to produce your food product are often changing. The prices are changing much more quickly than the changes you're able to make on the selling side. So we'll talk a little bit about commodity hedging. Again, we'll attempt not to get too far off into that detail ditch because that can get pretty confusing pretty quickly. And then finally, we'll wrap up by talking a little bit about the reports. When I say reports, in this country, the USDA gives us reports about the grains and oilseed sectors. They give us 15 reports a year. They give a whole bunch of other reports on the livestock sector. And I'm sure there's plenty of other reports, you see from the Department of Energy reports on how much petroleum we're producing and what are our unleaded gasoline stocks and things like that. We're going to stick more to the grains and oilseeds like we're going to do here for the planting dynamics when we get to that. But we'll talk a little bit about those government reports and what information our government gives us to try to help us monitor and analyze commodity markets. So we're going to show you a little video clip here. I'm crossing my fingers hoping that you can all hear it. There will be a bit of homework for today's webinar. For anybody that is on this call or anybody that wants to be in the commodity business at any point in their life, or anybody that just wants to watch an entertaining movie, there's a 1983 movie It's an Eddie Murphy movie. It's called Trading Places. It's hysterical. It's very entertaining, and also give you a good bit of insights into how the commodity markets work. So let me just see if I can get this video going, and hopefully you can hear it.
We are here to try to explain to you what it is we do here.
We are commodities brokers, William. Now, what are commodities? Commodities are agricultural products, like coffee that you had for breakfast, wheat, which is used to make bread, pork bellies, which is used to make bacon, which you might find in a bacon and lettuce and tomato sandwich.
I tell you what, I've seen that 1,000 times, and it still makes me giggle to watch that. But you really, if you get the time, you really should go watch that movie. So, what is a commodity? Well, we've talked a little bit about some of the items that they are, or some of the different commodities that are out there. But if you just Googled what is a commodity, you'll get an answer similar to this. It's a raw material or primary agricultural product that can be bought or sold, such as copper or coffee. Now, Lord knows why this definition picked those two, but I suppose if you had to pick a couple, those are as good as any. So let's look at some of the different commodities in the three categories that we talked about earlier. Stuff we grow category, everybody's familiar with corn and soybeans and wheat. You may or may not have known that there are three different varieties of wheat. A little bit more on that later here. But I'm not going to read the whole list for you, but you could see all the way down to, you think about stuff you eat, but also at the bottom of that, I've got lumber. We do actually grow trees for lumber, and you can, believe it or not, actually hedge lumber prices. A lot of people don't really realize that. So in the stuff we dig up category, obviously petroleum, crude oil is probably at the top of the list. But you can also see there a lot of items like natural gas, precious metals, some not so precious metals that are used in industrial manufacturing. And then in the third column, there are also what we consider to be commodities of things that we make out of the stuff that we either grew or dug up. Soybean meal and soybean oil actually are made out of crushing a soybean. Diesel fuel and unleaded gasoline obviously come from petroleum. We've got milk that we produce from cows over here in this category. And what do we make out of those? Well, the primary products are butter, cheese, non-fat, dry milk, and whey. So that gives you an idea of what a commodity is, of the three basic categories that it falls into, and some of the examples in each one of those categories. This list, by the way, is not completely inclusive. There are many, many more that would fall into this. So now we're going to focus in just a little bit on the ag commodities, and specifically the grains and oilseeds complex, to talk a little bit about crop dynamics, where we grow different agricultural commodities in different parts of the world, and those development stages of those plants. Let's start looking at the U.S., and let's start with where we grow stuff. Now, the USDA actually produces quite a bit of very useful information. This is one of the maps that they produce and update regularly. It is a map, and you can see the darker green shaded areas are higher. The darker the green, the higher concentration of acres of this particular crop, in this case corn, and where it is grown county by county in the U.S. And you can see here that the big five producing states for corn are Iowa, Illinois, Nebraska, Minnesota, and Indiana. You can also see that we grow quite a bit of stuff up here in the northern plains. Just as a side note here, when it comes to corn and soybean production, that's been one of the major growth areas here in the last couple decades. 20, 30 years ago, we really didn't produce nearly as much corn and soybeans up in the northern plains, but recent varieties, seed varieties have allowed, even with the shorter growing season up there, have allowed for quite a bit of expansion of those crops up in that part of the country. When you look at soybean production, similar but a little bit different. You can see that we grow quite a few more soybeans further south down here into the Delta, the Mississippi River Delta. When you look at the five top producing states, however, they're almost identical. Matter of fact, the top five states for corn production are also the same top 5 states for soybean production. The only difference is you swap Minnesota and Nebraska in the order ranking. So you can also see that we grow quite a few soybeans, as I mentioned, with corn up here in the northern plains. This has again been one of the biggest expansion of soybean area in the U.S. in recent decades as well. When you look at wheat, 2 big states stand out, Kansas and North Dakota, but it's not quite that simple. We grow several different wheat varieties in the U.S. There's 3 big varieties: hard red winter wheat. That's primarily what's grown in Kansas. Hard red spring wheat. It is a wheat that is planted in the spring and harvested in the fall like corn and soybeans. North Dakota is the big state there. The 3rd largest produced of the 3 classes is soft red winter wheat, but it has got a much larger growing area. We plant soft red winter wheat everywhere from Arkansas, Missouri, Illinois, up into Wisconsin, and most of the stuff you see here in the central and eastern U.S. ends up being soft red winter wheat. But you can see the different areas and the different crop areas where we grow things here in the U.S. You've heard the U.S. referred to, especially when it comes to wheat production, as the breadbasket of the world. Well, it really kind of used to be, but not quite so much anymore. Wheat is one of those crops that you can grow it in a whole lot of different regions in other parts of the world. When I started this business 40 years ago, the U.S. was the breadbasket of the world. Matter of fact, almost half of world trade, wheat that was exported in the world, came from the U.S. This year, that percentage that's going to come out of the U.S. is likely to be 10%, actually probably a little bit below 10%. It's not because we're really producing a lot less wheat here in the U.S. It's that other parts of the world are producing a lot more. And one of the most prominent growth areas has really been Russia and Ukraine. This is Russia. This is Russia's winter wheat crop. This is wheat that gets planted in the fall and harvested in the spring and early summer, typically here in May and June. This is where they plant their winter wheat. Just like I talked about in North Dakota, they also plant and harvest spring wheat. This is wheat that would be harvested obviously in the spring, hence the name, and or planted in the spring, hence the name, and harvested in the fall. Ukraine is also grown as a very, very large producer of wheat and corn and sunflower seeds in the world. Now, this is just their wheat production map. And this is one of the reasons that wheat prices got extraordinarily high a couple years ago. On February, I believe, 27th of 2022, Russia invaded the Ukraine. Ukraine is a major producer of wheat. A whole lot of the world's wheat comes out of the Black Sea, which is the Ukraine and Russia primarily. And because of that, the market really perceived that there would be a large supply disruption, which there was for a while. But the market has kind of fixed this. You could see that Ukraine also, though, is a very, very large producer of wheat. I'm going to back up here and show you something to give you a little bit of perspective. This is called the Crimean Peninsula. This is where a lot of export facilities are for the Ukraine. Odessa here is another big port for the Ukraine. If I back up a slide here to give you some perspective, this is that Crimean Peninsula right here. So here's the Ukraine nestled in next to Russia, just to give you some geographical perspective there. Another huge growth area, but primarily when it comes to soybeans and to a little bit lesser degree, but also a large degree, I guess, corn, is South America. When I started this business 40 years ago, Brazil was not producing many soybeans at all. As we speak, Brazil is actually a larger producer of soybeans in the world than the U.S. is. To give you a little bit of perspective on production, and I got to switch over here to my notes. Bear with me just a second. Brazil produces. I'm on the wrong slide there. When it comes to corn production, actually, this is corn. I was on the wrong slide. Let me back up. Corn production, the U.S. is still number one. We produce about 390 million metric tons of corn a year. China comes in second with about 100 million metric tons less. Brazil is third, actually a little bit of a distant third here on corn production. They come in at about 112, 14, 15 million tons is where they're likely to produce this year. When it comes to soybean production, Brazil has been the big producer in the world. They are the country that has surpassed even the U.S. in soybean production. Last year, Brazil produced about 156 million metric tons of beans. This year's crop that they're harvesting as we speak, more on that in a second, is going to be probably 145 to 150 million metric tons to give you some historical perspective or some size perspective. The U.S. produces about 115 to 120 million metric tons of beans every year. So you could see in Brazil, and then south of Brazil over here in Argentina is another primary growing area for soybeans. To give you that same size perspective, Argentina grows about 50 million metric tons of soybeans a year. So now let's talk a little bit about the crop calendar, but rather than me slowly and grindingly taking you through the 12 months of the year and what's going on where, let me start by just dividing the world into the Northern Hemisphere and the Southern Hemisphere. When it comes to growing regions, that's a pretty good way to do it because you plant in the spring. A lot of our crops you plant in the spring, you harvest them in the fall. In the case of winter wheat, we plant our winter wheat crop typically about when we're harvesting the spring planted crops. That wheat comes up out of the ground. It's like a grass. When the weather gets cold, it'll go into dormancy. And then when the weather starts to warm up in March and April, it will come out of dormancy and it will grow and it will turn into wheat. The Southern Hemisphere, obviously, their seasons are exactly the opposite of ours. So that's going to give you a lot of perspective in what's going on at different times of the year. So what's going on in January around the world? Well, it's the winter up north in the Northern Hemisphere, so we're not doing much. Our winter wheat is sitting dormant. Farmers are thinking about what they're going to plant when the weather warms up the following spring. But we're in the growing season down here in the Southern Hemisphere. Australia is in the process of getting ready in January to harvest their winter wheat crop. When you get in South America, we are right in the middle of the growing season. Now, a little bit more on South America, especially Brazil, where I said all the growth, a lot of the world growth has been in corn and soybean production. Hopefully you can see my cursor, but the equator goes right about through here. Brazil, unlike the U.S., Brazil will grow corn and soybeans almost all the way to the equator, which means they have a much longer and extended growing season. Be a lot like if you planted corn and soybeans in Cuba. And because of that, their season's a little different. When you look at the North American growing region here, the Corn Belt in the U.S., it's much more smaller geographically. It is much more east-west oriented. This is the growing region in South America. It goes all the way up here from nearly the equator up at the Amazon basin and Brazil, all the way down into central Argentina, which has a very similar longitude as the U.S. Midwest. So in January, Brazilian farmers are actually starting to harvest their soybean crop. The Argentine crop is still very much in the early growing stages. Brazil will start harvesting in early January in some cases. They're currently harvesting. They're about 55% harvested right now in the middle of March, and their harvest will drag on all the way into early April. Argentina's primary harvest month is going to be April. And that's what's going on in South America. February is obviously a significant harvest month. In Brazil, we've got crops maturing or starting to mature in Argentina. And then as you get out into March, we start becoming a little bit more active in the Northern Hemisphere. The Southern Hemisphere is in full swing. Argentine harvest is starting. Argentine harvest for soybeans and corn will accelerate as we get out into April. Brazil is typically wrapping up by the time you get to the end of March. But, and this is what is very different than the U.S., when you look at the U.S. Midwest, a farmer will grow corn or a farmer will grow soybeans generally. There's other crops. They will typically rotate those two crops. One year they'll grow corn, the next year they'll grow soybeans. The reason that they do that is corn, like your yard, the grass in your yard consumes a lot of nitrogen. You want it to grow fast. You want it to be nice and green. You throw nitrogen fertilizer at it. Corn is very much the same way. A soybean crop is a legume, and it will actually set nitrogen into the soil. So it actually will require a farmer to put less nitrogen fertilizer in the soil if he simply rotates back and forth every other year's corn and soybeans. In central Brazil, farmers will actually run two crops in the same year. Farmers in Brazil, in central Brazil, will start planting their soybean crops in September, mid-September. They will start harvesting, as I mentioned, in January and February. And then when they harvest that bean crop, they will plant a second corn crop. It's called the safrinha corn crop right in behind it. And so that's the one thing that you have to look at that's a bit different when you're talking about South American growing season than North America. When you get into April, our winter wheat in Northern Hemisphere, whether you're talking the US, whether you're talking Russia, whether you're talking the Ukraine, is coming out of dormancy. It is starting to grow. In South America, they are wrapping up their harvest and they are getting ready for winter. May, we are full swing in planting. April and May are big spring planting months in the Northern Hemisphere. South America is wrapping it up and battening down the hatches generally for winter. June is the heart of our growing season here. June, July, and August in the Northern Hemisphere are the crop development, reproductive phase parts of the growing season. I'll talk more about the crop phases here in just a second. And then we start getting into fall. We get into September. Crops are maturing. We start harvest in the Northern Hemisphere. Again, Brazil will start planting soybeans in September, their soybean crop. October is the big harvest month in the Northern Hemisphere. And the crop is starting to grow in Brazil. Crop is getting planted in Argentina. November, we're wrapping up harvest and getting ready for the winter here. And you come to the end of the year where we're getting into the growing season in the Southern Hemisphere and we're battening down the hatches here. I know that was kind of quick and dirty. All this information is available on the USDA website. It's a handy reference. We use these slides quite a bit in a lot of the presentations we do for customers. So use that as a resource as needed. So now let's start talking about the crop development stages. The reason that we tell you this is because the plants themselves need different things when it comes to the weather and soil moisture conditions at different parts of the crop development cycle. When you get into the first part of this, you plant the crop, you're putting the seeds in the ground, you're typically fertilizing and spraying at the same time for weeds and other things. Then that plant germinates and it will stick its head up out of the soil. One of the things when I talk about the USDA reports that I wanted to mention alongside of this is the USDA will track crop development through all of these stages and they will report it. Starting the first Monday in April, the USDA will publish a report. It's about 3 o'clock in the afternoon every Monday, and they will tell us what percentage at the beginning of the season, what percentage of the crop is planted. When we get that first report on the first Monday in April, probably not going to have anything planted to speak of, maybe a little bit of corn planting done down in Texas and the southern parts of the growing region. But they'll also start telling us what condition our crops are in. Well, if we haven't planted them yet, what condition could they be in? But remember winter wheat. Our winter wheat will be coming out of dormancy this year, especially early because of the warm winter, and they will tell us what the crop conditions are. Now, when they say crop conditions, the USDA has a very much a bit subjective, kind of a visual based. They'll rate the crops as either excellent, good, poor, or fair or poor, and they will tell us what percentage of that crop falls into each of those 4 categories. That helps us as we go through the growing season to monitor the crop health. How's the crop doing? To start giving us some ideas of what how many bushels might be out there when we get to harvest. So we plant the crop, those little seeds germinate and they stick their head up out of the soil. The USDA will report this as emergence. As we get out into April and deeper into April and out into May, and we start having these little corn seeds stick their little shoots up out of the ground, the USDA will tell us the percentage of the U.S. corn crop that is germinated. It will give us that information not only for the total U.S., but it'll give it to us state by state as well. The vegetative growth phase, this is when the plant, after the plant sticks its head up out of the dirt, for a couple months, it's growing. It's adding size to the plant, and it's preparing for the reproductive phase. I've got some pictures to go along with that I'll talk a little bit more about this as we get into it. The reproductive phase is just what it says. The plant's producing flowers, which will produce seed pods, which will produce soybean seeds. The corn plant works a little differently. It will pollinate, and it will grow that ear of corn that has seeds on it. When those seed pods and those ears are set, then a period of time will go by that we call the fill stage. The market calls the fill stage. This is when those seeds and the pods are getting larger. The kernels on the ear of corn are getting larger. Then that fruit begins to ripen. It matures and it starts to dry down. And then we pick it. So here's some planting pictures. Again, the crops are planted. Typically, corn starts going in April. Most of for the crop insurance, the USDA publishes dates for a farmer to get the full crop insurance. They can't plant it too early. They also can't plant it too late. So the crop insurance stipulates certain planting windows. In most parts of the Midwest, that's around the 10th to 15th of April is the beginning of it. And you kind of got to have that crop in by mid to late May, depending on exactly where you are in the Corn Belt. From there, the plant germinates and it emerges from the soil. It is just what it says it is. As I mentioned earlier, the USDA will report emergence, is what they call it. This is as the little plant emerges from the ground. They will report both state by state and then nationally what percentage of the U.S. crops have actually emerged. And then we start growing. This is a field that we use for pictures in our weekly decks quite a bit. It's right down the field from our office here in Waterloo, Nebraska. The reason that we use this field is because it's typically got corn and soybeans in it. Now, it might be a little bit odd, but this is actually Syngenta Seed Company's field. Syngenta's got a plant right here in Waterloo, Nebraska. And what they will do is they will plant their primary seed crop in the middle. This field's got a center pivot irrigation to it that puts water to the field. Then the buffer in the edges around the field that the center pivot irrigation can't get to, they will plant the other crop. So they will have corn and beans will rotate back and forth in the center of the field and the buffer zones every year. So we can get a good picture of both. But you can see these big green healthy plants. They are growing very quickly, but they haven't started the reproductive phase yet. That looks like this. As we get out into July, late June and July for a corn plant, a little bit deeper into to July for the soybean plant, the corn plant will produce ears, and those ears will start to produce silks. At the same time, this plant will shoot tassels out the top of the plant. This tassel is the male part of the plant. This is the female part of the plant. When you eat an ear of sweet corn, you're always picking those silks out of there. Those silks are each a hollow tube that will transmit the pollen that falls off of the tassel that sticks up here and is transmitted down to where that kernel is. So there is a silk that goes to every single solitary kernel on an ear of corn. Soybean plant works a little bit differently. The soybean plant will put flowers up. Those flowers will pollinate. A soybean plant needs a pollinator like bees and butterflies. That pollen, where that flower is, will pollinate, cross-pollinate from other plants in the field. And you could see that every place that there's a bloom, if there is enough moisture, you will have a little pod forms. This is a little tiny soybean pod here. One of the things I'll point out, and one of the reasons that when you look at yields, how many bushels per acre the U.S. corn crop yields, and how many bushels per acre the U.S. soybean crop yields, soybean yields will vary based on moisture, just like how much rain we get during the growing season, just like a corn plant will. But those yields have a much wider range when it comes to corn. The reason is This corn plant will pollinate in about a 10-day window. So how the weather is during that 10-day window will have a big big part of the determination on what the yield is in that field. So if you have a bad weather run when your field is pollinating, you're probably not going to have that good of yields. Soybeans are quite a bit more forgiving. Soybean plants will continue to set pods even as the vegetative growth stage is continuing. The plant is continuing to add height, and that plant will continue to add flowers, which will turn into pods, starting at the bottom of the plant and then progressing up the plant as time goes by. The plant can sit around and will keep putting flowers out, and it will wait for moisture. So a soybean yield is much more forgiving because the plant is in the reproductive phase for much, much longer than a corn plant is. So that's why you have much more yield variability and therefore more risk if you're planting corn than if you're planting soybeans. So here's what it looks like. These pods on the soybeans, they start getting bigger. As that plant takes up moisture from the ground, it adds it to the seed pods, and those seed pods get larger. Same thing happens with corn. This ear of corn pollinates. This is a very early, we peeled this ear back to show you very early pollination. You can see the kernels of corn are very, very small. But this plant will also take up moisture from the ground, and it will continue to add size and weight to each of these kernels on the ear of corn. Then the crop starts to ripen. Upper right picture there is one of our crop tours, I think from 2 or 3 years ago. You can see this soybean field turning yellow and starting to drop leaves. Believe it or not, the USDA will report that to us as well. They will report what percentage of the soybean crop is mature, what percentage is dropping leaves. The corn plant does the same thing as it dries down. One thing that's interesting about corn, now we have peeled these ears back so you can see them, but when the corn plant matures, that ear of corn that we showed you, I'm going to back up here. See this ear of corn is sticking up as this plant grows? As it dries and ripens, that ear will actually tip over and point towards the ground. This has implications at harvest time. What those implications are is that soybean plant, when it's mature, a farmer's going to want to get out and get that thing harvested as quickly as they possibly can. The reason is those pods, as they dry out, will get very brittle. The soybean seeds can fall out of the pod. That's not good. If you have moisture, that soybean seed will take up moisture much more quickly, and it will shed moisture much more quickly than corn will. The reason is, and I'm going to back up again, corn comes with its own little umbrella. If we hadn't peeled these back, that husk of corn, that ear of corn is pointing down, the husk is over the top of it, and so corn is much more tolerant of sitting out in the field for a longer period of time than soybeans are in adverse weather. Now, it can't sit there forever, but it's a little bit more tolerant. So farmers are generally at harvest time going to be much more attentive to when that crop's mature and get it picked when it comes to soybeans than when it comes to corn. They can do the corn later. They'll get the soybeans when they're at the right moisture and the right level of maturity. So that's that. Now let's talk a little bit about supply and demand balances. Now I had as a headline on the agenda slide, and I'll talk a little bit about it. We refer to it here in the office as the Goldilocks zone. What the Goldilocks zone, if you remember the story, Papa Bear's porridge was too hot, Mama Bear's porridge was too cold, Baby Bear's was just right. Well, when you look at the supply-demand balance with any commodity, there is a normal acceptable zone. That is a zone where you don't have burdensome supplies when prices get really, really cheap. You don't have very, very tight supplies where the market prices get very high to encourage rationing. You have a just right zone. For a lot of even ag commodities, believe it or not, that zone is quite different. When you look at a supply-demand balance sheets, there's two ways that markets will look at these ending supplies. It will look at them in just bushels. This is what you're looking at here is a history going all the way back to the 2003-2004 crop year for U.S. wheat ending stocks. By the way, I should explain what ending stocks are. When the USDA puts a balance sheet together, they start with how many bushels we had left from last year's crop at the beginning of a crop season. How many bushels did we produce? How many bushels did we import to give us the total supply? Then from a demand side, how many bushels did we consume domestically? How many did we export? How many did we feed to animals? And what do we have left at the end of the year? That is called your ending stocks. Becomes your official beginning stocks for the next crop year. And when you want to get to the end of a year, you don't want to be completely out. For wheat, this is kind of the Goldilocks zone. You only don't have 550 million bushels. When you start getting much over 700 million bushels, you start to get some burdensomely large, heavier supplies. This is generally located with or associated with cheaper prices. When you have not enough, like down here, this is generally associated with very high prices. This was a crazy year in the wheat market right here. 305 million bushels as an ending stocks is essentially out. It means you have none left. The second way that the market will look at this is what's called stocks to use. May sound complicated, it isn't. You look at the total use, what was your total demand? Demand for domestic consumption, demand from exports, demand from animal feed that I mentioned, and then you simply divide your ending stocks number into what your total demand is, and that gives you a stocks to use ratio. This is another way to look at it. And when you're looking at corn here, generally for corn, 10 to 11% on the bottom, you get up much over 13 or 14% on the top. This is your normal zone or your Goldilocks zone. Up here, where we're going to be this year, is getting to be quite a bit of corn. It's burdensomely large supplies, generally associated with cheaper prices. This is why corn prices have been falling so much of late. However, we've lived through several very tight years for corn. These were historically high price situations. So when you look at commodities, you have to understand that for each commodity, that range, that quote normal range, is in a little bit different spot. And then you start looking at how you are relative to that range, and that'll give you an idea whether prices are going to be above their long-term norm, or below. So let me show you a lot of numbers on a page. I hate eye charts like this when it comes to a 101 type call or an introduction to commodities call like this, but I did want to show you the balance sheet. This is how the USDA looks at it. So the USDA will tell us in this particular year, this was the 22-23 crop year here, we used an example. USDA estimates from talking to farmers that we planted about 88.5 million acres of corn. We're going to harvest that much. That was what our yield was, 173.3 bushels per acre. That meant that we made a 13.73 billion bushel corn crop that year. You add that to your beginning stocks, a small amount of imports that we get from Canada typically, and it tells you we have a little over 15 billion bushels available. Primarily, one of the largest demand components for corn is feeding to animals, to livestock. USDA says we're going to use just under 5.3 billion bushels for that. We're going to consume about 1.4 billion bushels for food and remaining seed for next year's crop. We're going to make about the same amount that we fed to animals we're going to use to make ethanol, which gives us a total domestic offtake of about 12 billion. We're going to export just under 2 billion bushels, which means total demand is just under 14 billion. Remember the stocks to use number I gave you? USDA says we're going to have about 1.25 billion bushels left. If I divide that 1.25 billion bushels by this total use, I get this number right here. Remember I told you under 10% of corn is starting to get a little bit snug? That was a little bit of a snug year when it came to corn supplies. So that's the way the USDA does the accounting or forecasts the accounting for all of our crops. It's always the same format. So now let's talk about the relationship between price and supply. Well, this is corn, and what you were looking at here, each one of these dots is a crop year. Okay, right here you see this is the 21-22 crop year. We had a tight crop year. We were about 8.5% of use. Prices were historically pretty high, over $5 a bushel. You also see that as stocks to use ratios go up to some of these higher portions, remember I told you above 13 or 12 or 13% was getting to be some pretty heavy supplies of corn. Not coincidentally, When you have big supplies, prices are cheaper. When you have tight supplies, prices are higher. Not a coincidence. It's also not linear, as you can see from the curved line moving through this. So there's this normal relationship between prices and supplies. Large supplies, cheaper prices. Tighter supplies, higher prices. Typical economics. So now let's talk a little bit about hedging, and we're going to go back to another video from the Trading Places movie to get this part started.
And then there are other commodities like frozen orange juice and gold. Though, of course, gold doesn't grow on trees like oranges. Clear so far?
Yeah.
Good, William. Now, some of our clients are speculating that the price of gold will rise in the future, and we have other clients who are speculating that the price of gold is going to fall. They place their orders with us, and we buy or sell their gold for them.
Tell them the good part.
The good part, William, is that no matter whether our clients make money or lose money, Duke and Duke get the commissions.
Well, what do you think, Valentine?
Well, it sounds to me like you guys are a couple of bookies.
I told you he'd understand.
I giggle every time I see that too. It really is a great movie. So what is a hedge? Well, if you Google that one, the first thing that you'll get is that a fence or boundary formed by closely growing bushes or shrubs. That's not the type of hedge we're going to talk about here. A hedge is a contract entered into or an asset held as a protection against possible financial loss. What in the world does that mean? Well, the example that they give right below it, inflation hedges such as real estate and gold. So in other words, if you're expecting a lot of inflation, often your investment, your money in your 401k will not keep up with inflation. So what do people do to hedge against that? Well, they try to buy a tangible asset like a house or a piece of property or gold. For a food company, what would a hedge be? Well, let's take a very concrete example. If you were a restaurant chain and you have a menu, you don't change the prices on your menu every afternoon as the price of commodities change that day. Even though you're selling chicken and pork and beef, and you're serving French fries that were fried in vegetable oil, and you have all these commodity food items that you're serving to your customers, the price on your menu can't change. It's actually very difficult to even change it twice a year. Yet the price of those things that you're buying are changing daily, even by the hour. A hedge would simply be using a financial instrument. We're not going to get into that today. To hedge, to buy as a proxy for the item that you're going to use in the future to sell in your restaurant, or you could forward contract with your suppliers. Either one of those would be considered a hedge, but is basically a way of managing your margins within your company, whatever your company does. This is what we actually help our clients with, is managing that commodity risk. I don't know what the markets are going to do any better than anybody else does, but what we specialize in is helping our customers manage their business margins by managing their commodity risk. And that's about as close to a sales pitch as I will get today. A hedge is an investment that is made with the intention of reducing risk of adverse price movements in an asset. Quite simply, if you are a company that produces loaves of bread and sells on the grocery store shelf, and those loaves of bread sell for $1.99, if the price of your primary ingredient, the wheat that is milled into flour to make your bread, if it goes up and you can't raise the selling price in the grocery store, your margin gets smaller. That's what a hedge is. I think a lot of times when you look at the commodity markets, when a lot of people look at commodity markets, especially the futures market, which is a financial derivative to hedge that price risk, they see speculation. Now, there are speculators in the market, but the primary purpose for these derivative instruments is actually to help food companies and farmers and food manufacturers to actually offset or reduce risk. And we would tell you as risk managers that the primary tenet of every risk management strategy is to reduce risk. If it doesn't reduce your commodity price risk, it's speculation. So now let me give you a little bit about the USDA reports. When it comes to the grains and oilseeds, and I'll be very specific to that, the USDA gives us 15 very important reports every year. Every month of the year, they will give us a WASDE, what we refer to in the industry as a WASDE. Now, you might say, what the hell is a WASDE? WASDE stands for World Agricultural Supply Demand Estimate. And every month, on or about the 10th to the 12th of the month, we will get our monthly WASDE. And what the USDA does is for all US crops and all world crops, they will give us the supply demand estimate in balance sheet form. If you remember the slide that I showed you with all the numbers on it, they'll tell us what they're expecting the beginning supplies to be, how much they expect US corn production, Ukraine corn production, Australian corn production to be. They will go through all those balance sheet calculations for all those commodities, both in the US and the world. They will also give us quarterly stocks reports. Let me back up here a little bit. A crop year is not a calendar year. When the USDA is talking about a crop year for corn and soybeans, that crop year starts on September 1st and goes through the end of August. When we're talking about a wheat crop year, it goes from the 1st of June to the end of May. And so what the USDA will do when they're giving us those balance sheets is they will do it for the crop year. They will base that estimate on the crop year. Then the USDA will give us 4 quarterly stocks reports. 4 times a year during that crop year, the USDA will do a survey. They're estimating the bushels that farmers are still holding, and they are actually physically measuring the bushels that commercial organizations would hold. What's a commercial organization? A grain elevator, an ethanol plant, a soybean crushing plant. They will actually take those, the big grain companies, ADM, Cargill, Bunge, AGP, CHS. They actually have to report physical stockpiles of these different grains. So 4 times a year, the USDA gives us their quarterly stocks reports. Think it's like balancing your checkbook once a quarter. They'll tell us how much money is left in the checking account at that point in the crop cycle once a quarter. They also give us a couple other big reports at the every year. They will give us at the end of this month, at the end of March. Actually, this year it's on Thursday, the 28th of March. They will give us our planting intentions report. What the planting intentions report is they survey farmers and ask them, how many acres of corn are you going to plant this year? How many acres of beans are you going to plant this year? How many acres of wheat you're going to plant this year? And then they give us their estimate. The USDA gives us the estimate of what that spring planted acreage mix is likely to look like. Now, if you're doing the math at home, you might say, well, now, wait a minute. I get 12 monthly WASDE. I get a monthly WASDE. That's 12. I get 4 quarterly stocks report. That gets me up to 16. And I get this planting intentions report. That's 17 reports. I thought you said 15. Well, they combine a couple of them. At the end of this month, on March 28th, we will not only get the prospective plantings report, we will also get the March 1 stocks report. At the end of June, we will get spring plant or winter wheat acreage or crop size, final crop size, and we will also get our June 1 stocks report. So they do combine a couple of these reports. We get 15 big reports from the USDA every year. So you may wonder, what is this chart that I'm looking at? Well, it's just like football games. Some football games are not nearly as exciting as other football games. What Bill Lapp at Advanced Economic Solutions, of economists that we work with, some of your companies might probably already be dealing with him, probably the preeminent commodity economist in the U.S. He has gone back for the last 20 some odd years, and he ranks these reports based on how much price volatility do they cause on report day. And you could see that this June 30th report and this report that we're going to get at the end of the month are a couple of bigger ones. These generally cause the largest amount of price disruption. You get other reports like the February WASDE and the March WASDE that we've gotten here in the last month. They typically don't cause a whole lot of price movement. So at any rate, that is the reports that we get from the USDA every year. And when you look at a lot of the different things that you have to deal with when you're trying to look at and analyze and predict commodity prices, what you find out is that there's a lot of moving parts, shameless plug intended, when it comes to the commodity business, but that's kind of what keeps it fun in our opinion. So I think that is all we've got for you here today. If there's any questions, you could probably just type them into the chat line. I will give you a minute or two if there's any questions that came up, and we'll look at what those might be. And we also, in the meantime, I would like to thank you all very much for joining us today, and hopefully you found this useful. Don't think I see it. Well, we got a question coming in there. Oh. Yeah, here we go. How does base affect pricing, such as booking base? Not exactly sure what you're asking there. If you could help me with that a little bit. I think what you might be talking about when you say, how does base affect pricing? If you're talking about the planting base, the base acreage that the USDA does, clearly when we get to the end of March and the USDA gives us our expected planted area for the different crops, if you have less planted area, that means less prospects for supply. That means, generally speaking, prices will be higher. And the opposite is also true. The other part of that, though, when you look at acreage, that's only part of the puzzle. Yield is the other part of the puzzle. And what that means, weather during the growing season is probably just about as important, if not more important, than acreage. We say in this business, corn yields are made in July, soybean yields are made in August. So it's really July weather that's probably the most important thing to give us an indication of what corn pricing is likely to be. August weather is a bigger influence when it comes to soybean pricing. So I don't think I see any other questions there. Again, we thank you all very much for joining us here today, and we hope this was very useful for you. Thanks again.